Right, let's jump straight into this explainer. We're about to decode this crazy intersection where the absolute fever pitch of the AI hype cycle crashes right into the gritty, highly competitive comeback of fintech funding. We are looking at a week where the lines between everyday consumer banking and fully automated commerce completely blurred, and we're going to break down exactly how this is happening.
So think about the plastic in your wallet right now. Got it? Now imagine that instead of you swiping it, a machine is out there autonomously making purchases for you. We're literally talking about robots with their own wallets. Because that sci-fi future? Yeah, that actually arrived this week.
Here's the roadmap for today. First, a normal week in fintech. Then, machines opening their wallets. After that, Current buys more runway, followed by Koho chasing a bank charter. And finally, we'll wrap up with the future of your money.
Starting us off with Section 1, machines opening their wallets and Mastercard's massive AI play.
Okay, so Mastercard just quietly launched something called Agent Pay for Machines, or AP4M. The big deal here is that AP4M allows machines to process microtransactions. We're talking fractions of a single cent, at literal machine speed. It works across regular cards, bank accounts, and stablecoins. And the absolute kicker here, zero human involvement. An AI agent can now authorize, coordinate, and totally settle a transaction entirely on its own across Mastercard's global network.
And the sheer scale of this launch is mind-boggling. Mastercard didn't just test this in some backroom lab. They launched it with over 30 massive partners. We're talking absolute heavyweights bridging traditional finance and crypto. Coinbase, Stripe, Adyen, Global Payments, Ripple, Cloudflare, and the Chicago stablecoin startup CoinFlow. This is a massive, unified push from the industry's biggest players all at once. And the technical plumbing holding this together is fascinating. To make this work securely, the credentials for these autonomous agents won't just live on some traditional server. They're actually going to live directly on blockchains. Specifically, they're using Polygon, Solana, and Base to handle the identity and credentialing of these AI agents.
Which brings us to a really telling quote from Joram Lambert, Mastercard's chief product officer. He calls this whole development a super bloom of AI business models. But, he's also being super realistic about it. He openly admits this is a 5-year infrastructure bet. It's not some quick scheme to pump next year's Q3 revenue. They are literally laying down the pipes for a totally new kind of economy.
Now, the really huge tell in all of this is how they're handling stablecoins. They aren't just bolted on as some trendy afterthought. Alongside standard cards and bank accounts, stablecoins are being treated as a first-class payment rail from day one. This is Mastercard quietly but firmly conceding that programmable money officially belongs in enterprise commerce. Suddenly, Coinbase having a prominent seat at this launch table makes total sense.
So to wrap up this first huge development, the foundation for AI or agent-tech commerce is now fully laid out. Mastercard just built the payment layer for machines, and importantly, crypto rails weren't just a side quest. They were invited right to the founding of this new network.
Let's pivot to Section 2. Current buys more runway in the gritty neobank survival game. A staggering $1.5 billion. That is the massive new valuation the New York-based neobank, Current, just hit after closing an $80 million Series E round. That round was led by Spring Coast Partners, who also snagged a board seat in the process.
To understand how they actually pulled this off, we have to look at Current's DNA. Founded back in 2015, they have been laser-focused on everyday consumers, offering banking, payments, and credit. But right now, they are pushing AI-powered financial tools to their users super hard. Plus, they've stated that profitability is actually on the table for this year. When you combine that with their heavy-hitting backers like Andreessen Horowitz, Tiger Global, and QED, investors who have seen a lot of neobanks rise and fall, you get a very clean, steady growth story. No dramatic pivots, no rushed IPO timeline, just solid execution.
But you really have to compare that to their brutal competitive set. Current is out here raising fresh capital and eyeing profitability, while their rivals are facing serious headwinds. Chime, for example, is public and trading near its 52-week lows. Another competitor, Dave, is out there aggressively fighting just to protect its margins. Current is betting big that their superior AI tools will create incredibly sticky users, helping them basically outrun the competition before the inevitable wave of industry consolidation hits.
So the bottom line for Current is that they successfully locked down their survival capital. They bought more runway in a super crowded lane. But the real test of their AI strategy begins right now. They actually have to prove their product earns that $1.5 billion price tag.
Moving up north for Section 3, Koho chases a bank charter using the Sovereign playbook.
Talk about explosive growth. Toronto-based Koho just raised $130 million, rocketing their valuation from $800 million last year all the way up to $1.33 billion today. For a regional player, that is absolutely massive.
But why do they need all that cash right now? Well, Koho's CEO, Daniel Eberhard, says they are getting very close to officially obtaining a Canadian banking license. This is a huge regulatory hurdle they've been fiercely chasing since 2021. Today, Koho has a staff of about 250 and revenue somewhere in the mid-200s of millions. But Eberhard isn't stopping there. He's publicly targeting an ultimate outcome of $30 to $50 billion.
And the fuel behind that wild ambition? That $130 million raise was led by Mubadala, an Abu Dhabi sovereign wealth fund. Just to put their scale into perspective, Mubadala manages a mind-boggling $385 billion in assets. They actually took the Canadian wealth manager CI Financial private in a $12 billion deal last year. This proves for sure that this is absolutely not tourist money. This is serious, calculated institutional capital.
And if you look at their full roster of investors, Koho has assembled an absolute dream team. You've got sovereign wealth from Mubadala leading the charge, sure, but you also have personal checks coming in from Toby Lutke, the CEO of Shopify, and Michael Linford, the COO of Affirm. With this exact mix of massive institutional capital and elite operator buy-in, Koho is satisfying the strict capital requirements needed to finally win that official bank charter.
And this signals a major theme we really need to watch heading into 2026. Koho just got Abu Dhabi money to become a real chartered bank. We are seeing foreign sovereign wealth funds parking massive amounts of capital into North American neobank charter races. It is the exact same playbook we saw during the Latin American fintech land grabs, just playing out in a colder climate. All right, Section 4, the future of your money, and tying all of these wild threads together.
We have a stark, honestly fascinating contrast playing out in the market right now. On one side, you have the futuristic, almost invisible world of AI micropayments being built on blockchains by Mastercard. Then, on the completely opposite side, you have this highly competitive, deeply human-centric race where companies like Current and Koho are fighting tooth and nail, using massive funding rounds and sovereign wealth just to hold your everyday deposits and become your primary financial hub.
Which leaves us with one incredibly fascinating question to ponder. With machines now officially armed with their very own wallets on a global payment network and human-focused neobanks battling for sheer survival and profitability, are you ready for a world where your bank might just care more about the transaction volume of your AI agent than it cares about you? It's definitely something to think about. Thanks for joining me on this explainer, and keep learning out there.